The Dow formed a shooting star on Friday, and even though Friday is not expected or kind of considered a very important trading day because of it being right after Thanksgiving, as well as being an abbreviated day, you got to keep in mind that candlestick signals are the result of everybody buying and selling during a specific time frame. And even though it might not be the full gamut of investors on that day, it's still the accumulative knowledge of everybody buying and selling that were there on that day. So as we saw the shooting star today, we saw the markets open lower and trade lower with the Dow closing below the T-line. This kind of indicates there's a potential of a pullback. First of all, because of the candlestick reversal signal. Secondly, because of a close below the T-line. And as you can see, the T-line been acting as support. So for this uptrend to continue, it needs to do the exact same thing it did here when it closed below the T-line. It needs to open positive and trade back positive again. If it trades lower, the anticipated target would be the 50-day moving average and or right in this area where the old technical analysis adage is that once a resistance level is breached, they'll usually come back and test it for support. So this should give an idea or give an indication that we're going to be in a downtrend unless they open positive and trade positive tomorrow. Another warning signal was the NASDAQ in the overbought condition gapped up and did a doji on Friday. Whenever you see a gap up in the overbought condition and they do a candlestick reversal signal potential, start looking for a sell signal, which is what we saw today with the bearish engulfing signal or creating a left-right combo. This is a very strong indication that the sellers have taken control. So expect some selling. Just watch the T-line and the NASDAQ to see if that's going to act as support. Again, the visual capabilities of candlestick analysis allows an investor to expect with a much higher degree of accuracy what's going on in investor sentiment. A gap up doji in the overbought condition usually implies that's where the investor sentiment has finally reached equilibrium and you can start watching for a reversal. Just because the markets look like they're going to get soggy doesn't necessarily mean that every stock is going to get soggy. As we can see in our recommendation on GoGo, it traded right here on Friday right at the T-line with a very simple trade today. If it opened lower, you closed out the position. It needed to open higher and trade higher to stay above the T-line. The fact that it gapped up from this little kicker type signal and closed up strong gives us the implication that if this is wave 1, wave 3 is in progress, which could take this up into the $35 to $36 area very quickly. This is the type of setups you want to use, especially when you're trading options. Candlestick signals provide not only the magnitude, but exact timing of when to start getting into a trade. That same scenario can be witnessed in the STX chart. Notice how we've had kind of a little rounding fry pan bottom support here and we're trading right up here on the resistance level, which means with stochastics coming up and kind of doji bullish confirmation, if they start trading positive, you want to be buying immediately because that indicates that this level right here is not going to act as resistance anymore and that the bulls are in control, making a potential wave 1, wave 2, wave 3 scenario. The fact that we can visually witness what the candlestick signals are telling us about what investors do time after time gives us a big advantage to be in the right place at the right time and hopefully not only get uptrending positions, but trends that are going to be inordinately strong compared to the rest of the market. That'll be it. We'll see you in the chat rooms.